This is the weekend edition, good through Sunday, February 1st, 2015. My name's Dez here at Grok Trade. Not only do we round out the week, we round out the month. January, reading some news here, U.S. economic growth slowed sharply in the fourth quarter as weak business spending and a wider trade deficit offset the fastest pace of consumer spending since 2006. Goes on to talk about Greece's financial problems and also talking about the weaker than expected U.S. growth data that has hit the markets here. As of late, you've been hearing me talking about warnings and being very cautious of what may be to come here in the markets. Looking here at the S&P 500, I want to share with you those warnings. As we rose to the top here, and we had this M, double top, M for murder, I was giving warning signs, kept saying warning, 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 several videos here, warnings. We did crash, come back up, warning, 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 we're at a trend line. It crashed. Come back up and then stalled. When we did this, we said shoulder, head, and shoulder. Warning, 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 especially when the neckline right here broke. And I'll show this to you. This neckline right there. When that neckline broke, technical textbooks will tell you that head and shoulder trend reversal pattern is confirmed when the neckline is pierced. However, we did drop, but we popped into resistance and then blasted through it, which threw everybody, all technicians, for a loop. We stalled here and started heading back down. As we continued to drop here on this candlestick, I said warning, 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 be very, very careful. Teetering on some ice. Very next session, which was Thursday, we go bullish. On Friday, however, we come back down. Now here's the problem. For you guys been following me for a long time, you'll see that we just crossed below a trend line. We have support here, support, started to act as support, but now has been broken. We broke support on this trend line. So we have a symmetrical triangle with a confirmed breakdown right now. Now, we do have an area of support coming across here, 1993. Remember that 1993. If we break that going into next week, that is a big time trouble. The markets could be in dire straits here in very short order, just based off of what we're seeing on the daily chart. Let's take a look here at the weekly chart. It's the weekly chart. The S&P 500, we have two lines, an area of resistance. If we got above that, it would be very bullish. That's 2088, 2089 area. And then a support area here at 2002. Support here, resistance support. We should act as support, but as you see, we broke down below that area of support. So it's relative weakness taking place here. So this tells me that we have a pretty good chance of next week being a bloodbath, a big red candlestick right here. Let's look at the monthly chart, see how we fared. Now here's the problem with the monthly chart, and this is arguably the worst damning information as far as the technicals are concerned that the markets are giving us, and it's this trend line being pierced. We've been in a nice sizable uptrend for some time now. And this puts us back to 2011. 2011, we had a nice little rally in the middle of the year. And we continue to go up. All of the rest of 2011, all of 2012, all of 2013, all of 2014. This is the first completed month of 2015. This is a big red gnarly candle. The reason this red candle is worse than this one or even this one or this one has to do with this trend line. We have stayed above this trend line for several years. This is the crack in the ice. This is the warning. This is just a ginormous warning to everybody. We have a lower high. We do have a higher low. This is an inside trading candlestick here with a close below a major trend line. So this big ugly rising wedge now has confirmed being broken to the downside. At best for the markets right now, this could chop going into this whole year, just chopping sideways. But if the markets are finally going to pull back after a sizable run here, if that's finally going to happen, that will be something to, this would be the time to do it. Now I want to bring your attention to something. I threw a dart and guessed on a prediction of where 2014 would close, and I thought we'd close right around 1700. However, we're at 1994, so my prediction was off by a little bit here, so we were more bullish than I expected to be, and I think most people would say that the markets are more bullish and has run its course on the bull side much longer than anybody has expected. All right, we're taking a look here at the NASDAQ. We're running higher. This is a monthly chart. Monthly chart is still intact. All is well with this, as long as it can stay above this trend line. If it can stay above this trend line, that'd be great. However, if we break down below, there's a rising wedge breakdown that will be confirmed. On a weekly chart, we're getting nothing but a rollover. Look at this. Higher swing high, and then these two little highs, flat line, and then this two little swing highs down. It's rolling over, and we are looking to break this 20-day, or in this case 20-week moving average. A lot of downside opportunity here if it does start to drop. This next week and next month could be gnarly. However, on the daily chart on the NASDAQ, we're still in the symmetrical triangle. We're at a support area. Relatively speaking, it's more bullish than what we're seeing on the S&P. If I look here at the Dow's bad. Symmetrical triangle broke out a few sessions ago and popped up, hit its head at resistance, and come right back down. So it's on the wrong side of that trend line. And if you look at the Russell's daily, it broke the trend line. Crack. Small caps broke a trend line. Support. I also put in, you'll see here, a minor trend line coming up and up and up, and that minor trend line, we even broke below that just by a smidgen. And so this is troubling to the markets. The banks here, forget these trend lines, but we have lower swing highs, lower swing lows, and we're in a down leg heading southbound. We're trying to find support here. It's a big area of support. If we break down going into the next week, slippery slope after that. Take a look here at the VIX. We've been chopping in this sideways, and we've been staying above $14, $15 area or point area, going up here around 24-point area. We've just been churning in this cycle here for the last couple of years. It'd be interesting to see how that plays itself out. Gold had this little bear or bull pullback rather, with a big pop on big volume. Nice pop. I was so loaded on closing out the day with my short positions, and then I still had longs going, so I didn't have capital to put into gold. I was able to buy silver today. I did do a position in silver. Nice drop, a pop. Not as much volume here, but I'm hoping this gap's going to fill and it's going to pay me some money here. So we'll see what that does for us. And so looking at some tech stocks here, got some big news for you, by the way, here momentarily. Tech stocks, Amazon was up a staggering 14%. Big payday for me. I had a sizable position on this one. Just had a killer week in the markets. Facebook down 2.7 here. Not so great on this. Now I bought Facebook going into the close yesterday, so this did not fare well for me. However, it did not trigger my stop loss, so I'm still in this one. I still have a stop loss on it. If it does start to get weak on me, I will unload it. I don't like that it's below the moving averages, but because we're in a symmetrical triangle, I'm going to give it some breathing room and see what this will bring me. Now, Google had an exceptional open. Ended up opening up with a gap and then took off up nearly 5% today. Nice bull pullback, doji gap, boom. Just a great run there. And Microsoft selling off, another 4% drop. Woe to all the execs at Microsoft and all their stock options. They're just taking a beating right now. Not something that they want to see. Taser is off by 3%. Taser is a heartbreak for me. If you guys remember when we were down here during the summer, I was like, Taser just is a buy because of what's happening in the markets with the police officer shootings and everything that they're going through. We're big supporters of police officers, by the way, here. And anyway, it just really felt like the camera sales would do exceptionally well. However, it just kept churning down here, and it would pop up. I thought this would be a buy opportunity, and it would pull back down. And I played it a little bit. I ended up playing it. I think down here popped up, ended up playing a high base. This is a nice high base, and then it got the double top, got out of it, kind of forgot about it. In the last few months, it's just went boom. I mean, this thing, I was trading this thing around $14, and it's, I mean, darn near doubled in price in a matter of within 6 months. Taser. So anyway, I think we're late to the party on getting in on Taser. I haven't looked at the financials lately. It could be overvalued here. What we're doing, big website release. Now, let me say this. It never fails. Anytime we do a new website release, especially a big one like this, we always have a hiccup. So all you subscribers for the vNewsletter, for the 201 courses, listen, chat room, there might be a hiccup this week going into this weekend. I will be in very close contact with you through email to make sure everybody can access the Stock Picks vNewsletter that we do and have access to the 201 courses. So it's something I'm working for, but I'm just saying sorry beforehand because I think we're going to have a little bit of disruption on the service provided to you going into this next week. But the new website will more than make up for it, and I will make sure you get the very best. I will actually be doing the Stock Picks technicals this week. Our whole team has picked the bull and the bear list on the Stock Picks vNewsletter. And so the fundamentals are all ready to go on the bull side and the bear side. I will look at them bullishly and bearishly, technically speaking, to look for setups going each direction. I'll be filling in for Mark as he is on vacation. And I'm also going to hide an Easter egg. It's a hidden link on the new website. So I'll probably blast out an email to everybody saying, hey, here's the new website. Check it out. And with that, I'll sign off. So be paying attention. I've been burning the midnight oil, putting finishing touches on this super duper uber cool shiny website that we've put together for you guys. Very excited about it. Take care. Share this with a friend. Let others be more educated about what the markets are and how they can help them, and having your eyes open with the broad markets to know what dangers may lay ahead. Take care and very safe trading.